Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Monday. In today's program, I want to talk a little bit about the sort of happy mood the market currently is in, and discuss that and really have a chat and see if that's a false sense of security. But before we get into that, don't forget these little programs or these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Now, like I said this morning, there's this old saying in the market, the man, the myth, the legend. Here we go. Hello, Philip. Lovely to see you, buddy. And thank you. Well, lovely comment. I'm not quite sure that if I'm a legend, I'm not a legend. But thank you very much. A really lovely comment. But anyway, as I was saying this morning, there's an old saying in trading that says that you should sell in May and go away. And the reason why they say that is because usually the summer months are pretty quiet. Pretty quiet because obviously traders go on holiday and the market sort of takes a bit of a breather. However, like I said this morning, and I said on Friday, July changed the complete rule book at that. And July was one of the most eventful months for the market I can remember. And in general, the market is now looking to try and build on that momentum. Because basically July turned out to be the best month for the US equity market since November 2020. November 2020. Now, the S&P 500 gained 9.1% and is fighting back from its worst start to a year since 1962. The Nasdaq rallied 12.3%, okay? And the Dow Jones National Average rose by 6.7%. As well as that, we had last month, we've had a lot better earnings from Apple and Amazon, which has also boosted sentiment. And in general, the market is generally feeling in a pretty good mood. I mean, just a few minutes ago, we had the US ISM manufacturing PMI, which was announced better than anticipated at 52.8 versus 52 expected. However, to put a slight damper on that, the previous month was 53. So the question I have to ask is obviously, okay, S&P is doing, has had a good month. Last month, the Nasdaq did, the Dow Jones National Average, Industrial Average did, and the markets in general has done. In fact, just so you know, one of the many stocks I talk about a lot, one of the many companies I've mentioned in previous videos in a negative light, in a negative way, has been Target. Remember I said about Target missing its target, missing its earnings estimate. But Target is risen so far today in the market by 2.3%. And the reason for that is Wells Fargo's upgraded its stance. And they're saying that Target is now oversold and could rise as much as 20% from now on. So in general, the market's is in a good place. It's in a happy mood. And a question I have to ask, is this a false sense of hope? Is this a false sense of hope that the market is currently going through? Now, the reason why I say that, we all know why the market's hopeful at the moment and why the market's bullish. Yes, we had a US GDP came in negative at 0.9%, which technically puts them in a technical recession. And in general, the market's thinking, because of this negative data, and obviously because the FOM statement last week as well was quite dovish, they're thinking the Fed will not be aggressive with raising interest rates and will be easy on the market, meaning the market can handle it. This is what the market is thinking. I think they're underplaying the fact the Fed is committed to get inflation down to 2%. And the only way for them to do that is them to continue to be aggressive with interest rates. Now, we all know about the ongoing debate as well. Are we in a recession? Is the US in a recession? Technically it is, but there's so many people arguing about this. For example, White House Council of Economic Advisors member Gerard Bernstein, he says the labor market continues to be an important buffer to recession. Bank of America, though, they say, and this is where I think the labor market, like I said this morning, is going to be key this week. It's going to be a key event to keep an eye on. The Bank of America's Michael Galpin, he says there are growing signs that the labor market momentum is cooling from a pretty elevated level. So he is saying it's about to slow down. So they haven't got that buffer anymore. Like I said this morning, if we have a poor, disappointing NFP or a rise in initial claims, then it takes away their defense mechanism of saying, no, we're not in recession. We've got a strong labor market. And don't forget, the NFP this week is supposed to come in at 250 versus 372 announced in June. So lower than last month. So is there a sign? Is there a sign that the labor market is cooling? As it stands, the market at the moment is in a very bullish mood, very optimistic. But I do think, like I said earlier on, I think it's a false sense of hope. But anyway, let's have a quick look at some things and see how the market's reacting at the moment. This is the euro at the moment. Again, like I say, after falling to parity last month, it has recovered slightly. It's still testing that key level of 1.02684, which I've put in. That's still holding as a potential area of interest. We have a quick look at the cable. Cable is trading now above that key level of 1.21976. Don't forget, the cable has its own issues. This is a sterling dollar, of course, I'm talking about. It has own issues because obviously we have a leadership fight going on at the moment. Who's going to be the next Prime Minister of the UK? That's going to develop. Plus, like I said earlier on this morning, Bank of England is doing its interest rates decision this week, which I will do a watch along. That's going to be interesting development to see what they do. Will they do 50 basic points? So anyway, that's still, though, fairly bullish against the dollar. The dollar yen, look at the reversal of this. Okay, currently trading now at 131.93. 131.93. It was challenging around 134 just earlier on. Actually, it was challenging or looking to possibly go to 140. But now it's reversed. So we have got dollar weakness. Why? Because the market is optimistic. Let's have a look at something else as well. Let's have a look at gold, for example. Gold is still very bullish, though, at the moment. Like I said, the yellow metal is going to get its shine back the more and more talk we have recession. Currently now aiming for that key level of $1,791. That is a key area of interest. S&P 500, how's it opened at the moment? 4,137 points. Again, optimistic, bullish momentum. And like I say, how long is this going to last until it starts to cool? So anyway, yeah, that's what we're looking at the moment. That's the market as it stands. I don't speak Spanish, unfortunately. But I think I stand for Spanish. Anyway, nice to meet you. I hope you're okay. As I was saying. So yeah, I think that sense of hope will slowly start to dwindle. I really do. As we get more negative economic data. Yes, the ISM manufacturing today came in slightly better than anticipated, but it's still lower than last month's reading. Plus, let's see how the labor market does. But yeah, that's where we are at the moment. So anyway, key events coming up. Like I said, we have ISM manufacturing, which has already come out. We saw that today. Australian interest rate decision, which is tomorrow. That's going to be interesting, especially for you, Philip. Will they do 50 basic points again tomorrow? Move it to 185. EU retail sales, US ISM manufacturing PMI, Bank of England interest rate decision. We'll do a watch along. US non-farm payroll and US unemployment. As the market currently stands, FTSE slightly lower, negative 0.35. DAX currently trading at 0.13% higher, and Eurostock 50 currently trading at negative 0.13%. So that's how the market stands. So yeah, what do you guys think now? Do you think the market isn't a false sense of hope, or do you think the market, is right to feel this way? What's your opinion on this? What do you feel about it? What do you think? And Philip, if you're there, buddy, what do you think about interest rates tomorrow in Australia? I know you're in Australia, but do you think they're going to do the 50? Yeah, you reckon they're going to go for it, yeah? 50 base. That's what they expect, actually. But like I say, the Reserve Bank of Australia has been pretty aggressive with interest rates, haven't they? They've been one of the central banks who sort of surprised the market for being so forward and aggressive. So that would be interesting to see. So I think you might be right. I'd be surprised if they did 75 again, though. But I think 50, I think you're right. Is there any other questions? Anybody else want to say anything at all? No? Okay, not a problem. Not a problem. If you think of a question later, by all means, put it in the comments below on the Facebook and YouTube, and I will see it and I will reply next time I'm online. So do bear in mind. I'm back on, of course, tomorrow at 8. Oh, no. Yeah, well, like I say, there's an old saying, Phil. I think you're right. If America sneezes, the world catches a cold, basically. So if America goes into recession, the knock-on effect, it does tend to go across the globe. So, yeah, I think, let's say, if America does continue to deteriorate, and if the labor market, that's why I think the labor market is the way it is at the moment. So I think the labor market is key. But, yeah, if that starts to go, you reckon they should probably do 75? Yeah, well, the interest rates in Australia is 6.1%, I think, at the moment. So it's not as bad as the UK at 9.4 or 9.1. But yeah, maybe they will do 75. They did it last time and they surprised us. We expected 50 and they did 75. You never know. I think, another question. I think the euro might weaken with the winter months coming and the gas issue. Yes, I think you're absolutely right. I think gas is another story. I was reading today about Germany. They're having real problems with their storage as well. And I think it's the IMF. I reckon that due to the gas issue, Germany could lose as much as 4.3% of its GDP because of the gas. So yeah, that's an ongoing story. Go hard or go home. I like that. Too right. It reminds me of another British saying I like to say, but I can't say it live on here, unfortunately. But very, very good point. Go hard or go home. I love it. Is there anything else at all? Any other questions at all? Anybody likes to say? No? Well, once again, thank you, SMF 790, for your contribution. And Philip, absolute pleasure to see you again, buddy. Thank you for your interaction and your questions as well. I really, really appreciate it because this is a live broadcast and live does mean live, obviously. So it's always nice to have some sort of interaction and some chat while we're about it. But like I said, if you do think of a question later, put it in Facebook or YouTube comments. I will see it and I will answer it next time I'll go live. I will go live. And I'll be going live again tomorrow at 8 a.m. UTC. And again, tomorrow around 1:30 p.m. to maybe 2 p.m. UTC to cover a US session like I did today. But anyway, right. As I always say, if you're watching me on Facebook and if you quite enjoyed this little episode, give us a follow by all means. If you're watching us on YouTube and you enjoyed this little episode, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and you found it interesting and useful, and more importantly, you put up with me, my over-the-top enthusiasm about the markets, which I just can't help because I love the markets. Give me one of those. It's always nice to know that you like what I do. And I say I've got a couple of likes already, which I really appreciate. But anyway, till next time, remember these little videos are for educational purposes only and in no way whatsoever ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you out there, trade safe.